Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. Are investors switching from big caps to the Russell 2000? And if they are, why? He also looks at precious metals and so-called safe havens. Rick Ackerman, editor of the newsletter Rick's Picks, discusses market reaction to the contested U.S. election, interest rates, gold, silver, and whether a push to so-called sustainable energy is actually realistic. AddictedToProfits.net publisher David Skarica reports from the Bahamas on what massive government debt could do to gold and the U.S. dollar, and whether we should be paying more attention to cryptocurrencies. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can also find him on Twitter at ChartsByRoss. Welcome back to This Week in Money, Ross.
Nice to be back with you, Jim.
Ross, any special offers for our listeners?
Well, we extended the 25% off through the election, but we will make that good through the next few days here. So if somebody comes onto the website, there's a link in there. Also, if they want to, they can just take out a 2-month subscription where they just get a feel for our service, and we can, as I say, they'll be getting my work, they'll be getting Bob's work. So I think for anyone who hasn't looked at it before, we welcome them.
Ross, is there a shift in market action from the big boys to the smaller charts?
Well, yes, and this was pretty much, this started to set up in August, September, because the FANG stocks, we were getting upside exhaustion. So that's the relative strength, was just getting so high, that these things were into big overbought positions. We were getting, Amazon, Shopify, Zoom, these kind of stocks, where daily, weekly, monthly, signals were kicking in that they were, overdue now for decent corrections. And we pretty much, in that group, have gone nowhere since the middle of September. And in the meantime, the smaller cap names have started to come on. The value stocks have started to see bases. I mean, you take a look at the U.S. banks. They've all tested their March lows and turned nicely. They're still way off the highs that they had at the beginning of the year, but they've got nice bases in there right now. So, I think that the money managers who have been on those big names and made the big runs, they are clearly locking in their profits so that they can have their nice big year-end bonuses. And in the meantime, we're seeing the strength in other sectors, which is just so natural. I mean, this is also like the first half of 2000 when we had the dot-com blow-off into the first half of the year. And I can remember buying Brascom, which is now Brookfield Properties, and getting yields that were 6-7%, and basing, and then ended up with really good action after that. So, from what I can see at this point, if you look at the small caps like the Russell 2000, and that's a trade that we like to take every year because you get seasonal push on the upside in through the early part of January. The industrials, the materials, you look at the copper price doing really well. You look at the ETF, the XME, with stocks like Freeport-McMoRan really doing nicely. Healthcare definitely benefiting. So, and even the energies, which had been just probably the most beaten down sector, have turned a corner. Look as though they're going to take a bit of time basing here, but there's some pretty good looking items that are undervalued rather than overvalued.
What kind of reaction did the markets have when Pfizer said it had a possible viable vaccine that could be out in a few months?
Yeah, well, that was, I went to bed on Sunday night and things were reasonably quiet, and by the time I woke up, we had this dramatic move. I think about an hour and a half before the opening, the Pfizer announcement came out, and just immediate reaction. So the safe havens, the bond market, the gold, silver, the gold and silver mining stocks, just all got hit dramatically that morning. And on the previous week, we had seen gold and silver just starting to break out of little consolidation patterns, and with the news from Pfizer, and I guess also with the announcement in terms of the election, with most of the networks then calling it on Saturday, that by the time Monday came along, we ended up with these things right back down and testing their support. So while gold and silver had what I would call double bottoms a week ago, now they've got triple bottoms because they've held at those September 24th lows. So they still got a chance to do something here, but I think for silver, the big overhead resistance is around 27.80, and gold, I think at this point now, it retraced about a third of the loss that it had early in the week. Silver retraced about half of its loss. So it's going to take probably a bit more of a consolidation here before they've got a chance to try and turn the corner for what would typically be a mid-December buy for a rally into the first quarter.
Why is the Russell 2000 back in play?
Well, it's, we just, I did some work with Dr. Zimba back in the early 1980s. And, we looked at small cap performance around year end, going all the way back to the 1920s. And this phenomena, was there just about every year. You would see, not necessarily, it wasn't 100%, you would see the, small caps rally, especially like if you were in a bear market, but they would rally relative to the big cap names, relative to the Dow or the S&P. And it just seems to be that there are better bargains usually available. They've, if anything, been under pressure quite often in the latter part of the year, and so the tax selling part of that abates, and you end up with a vacuum above. So any buying that comes in, all the sellers have already gone, to the sidelines. And I think if you want to look at small caps, look at the Canadian energy stocks. It used to be some mid-tier names in terms of their size, and so many of them are really, really cheap right now. Wouldn't be at all surprised to see that is a sector that just does really, really well coming out of its tax loss pressure.
Ross, thank you so much for chatting with us.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Now we go south to Florida to speak to Rick Ackerman next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He's speaking to us from Florida. Rick, welcome back to This Week in Money.
Well, thanks for inviting me on, Jim. It's always a pleasure.
Rick, can you give us a little bit about what Rick's Picks is all about and how can people subscribe to your service?
Well, I'm glad you asked. Rick's Picks is a daily online service that's geared to traders of stocks, options, and futures. And I put out actionable advice and analysis for some popular trading vehicles, even the S&Ps, gold, silver, dollar, and in the chat room, which draws great traders from around the world, I do take requests, but we've got a pretty good flow of information there, and our local experts on any number of things. And the website itself is rickackerman.com. And you can get a 2-week trial for just $1 if you click Start Trial at that page.
The U.S. stock markets are hitting new highs. Is this a good sign for the year ahead?
Well, I think it's a bull market in craziness for sure. I was forecasting wrongly as it happened that the market would take off when a Trump victory, but it would hit the ceiling with Biden and eventually collapse. So here the market is, I think it's in distribution here. It's obviously shown some strength, since it became more or less established that Biden's going to be the next president. But, I think Wall Street's line that, they're indifferent, that Biden will be just as good as Trump for the market. I think that's a flat out lie. And I think they're doing it really, to just have a climate in which they can distribute stocks more easily. That's what I think is happening.
Could the stock markets be predicting the outcome of a contested election?
No, I think they're too confused like I am. I'm convinced beyond any doubt, based on certain things that happened in Michigan alone, that the Democrats did steal the election. But I'm having my doubts that Trump is going to prevail with that in court. So far, at least what's been divulged of the filings in Pennsylvania and elsewhere suggests that they're just going after smaller instances of fraud here and there, rather than the kind of wholesale stuff that supposedly was accomplished using software that is a question of flipping a switch and having Trump votes miraculously turn into Biden votes. But I don't see any evidence of that, nor of the supposed sting that Trump was supposed to have had in operation the night of elections.
What do you see ahead for the U.S. dollar?
Well, I've been a dollar bull forever, really, because I am a deflationist at heart, and deflation is nothing if not about the strong dollar and the enormous pressure that strong dollar will eventually put on debtors. I don't think we're all going to slip the debt noose through some inflation that's going to essentially screw the creditors at the expense of the skip and go naked borrowing crowd. So I've been bullish on the dollar forever, and it came down to a very long-term trend line. This is I'm speaking about DXY, the dollar index, and the trend line is still intact, even though we've had some weeks of weakness. And the trend line comes in around 92. The dollar index is currently trading 92.79 and holding that line. So if this is not the beginning of a big new bull leg in the dollar, I think it will come sooner or later. But later, if you're hoping for a strong dollar, it's a case of you better be careful what you wish for, because a strong dollar in my forecast is an indication that we're in some sort of ruinous deflation.
What do you see ahead for the Canadian dollar?
I think the Canadian dollar will tend to drift lower, and as you know, it's always been pegged to the it's a resource play, and the Canadian dollar has really taken it pretty hard over the last few months. Currently trading around 70, about 71 cents. So there's no relief in sight really. I see lower prices. I think it's going to go into the 60s.
Gold's been trading in a range since hitting new all-time highs. What do you see ahead for gold?
Well, the bull market in gold has been maddening, and it really takes a lot of patience to stick with it. Gold got socked for about 100-point loss on the day that began the week with an announcement from Pfizer that they supposedly had some supposed vaccine, supposedly 90% effective. And but gold, we hit those air pockets because of certain opportunistic factors that are in play. And it's my understanding that the commitment of traders, more guys are very short gold, and they've taken it down, not because anybody could have inferred from Pfizer's announcement that would necessarily be bad for gold, but because it scrambled the stock market, the same sleazeballs who were out there running the show said, well, we may as well pull our bids for gold and pretend that vaccine announcement has bearish implications for gold. I don't agree with that, and I think that the takedown of gold that day was gratuitous. So I'm still pretty bullish on gold, and if you look at the long-term chart, even after that 100-point down day that took it to around 1848, it could fall another $400 and not do much damage to the monthly chart. So you got to like gold, but at this point you have to be patient because to me it looks like it's got further to correct.
Silver's been trading in a range since approaching $30 an ounce. What do you see ahead for silver?
It's going to be a high beta vehicle when it finally starts to move. It's going to show good relative strength in comparison to gold, and I think it's still, you're going to get a sharper move in silver than you do in gold when its time comes. But for now, it's just, it's doing fine. We've had, since early 2020, we've had a move from a low down around 1180 to $30 an ounce. So that's a lot to digest. So don't be surprised if silver comes down even to 20 or possibly below before it takes off. But the bigger picture is most surely bullish.
Where do you think the mining and junior mining stocks are heading towards the end of the year?
Well, there has been some very encouraging action on the monthly charts in GDXJ, which tracks the junior miners, exploration companies, and the key peak there was back in 2013 when GDXJ hit 54.56. So we've popped above that, and the pullback subsequently has to be corrected by definition. And so, like gold itself, I see some more correcting to do, but a very encouraging picture on the long-term charts.
Are the junior mining stocks likely to provide opportunities during the tax loss season?
I don't think there'll be any special opportunities there. It's like they'll get sold to death, but then they may get sold to death even after that. I think people who have stuck with the juniors are kind of used to it by now. So that's one dip. There may be a trade there to buy, a little bit of a pop, but I still think into January, February we're going to see more correcting in gold. But it still looks bullish, and I'm still, let's say, keeping an open eye for any moves that tend to pop it out of its corrective mode.
We'll have more with Rick Ackerman when This Week in Money returns.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Rick Ackerman. Rick, are we likely to see lower and possibly even negative interest rates ahead?
Well, negative rates have proven to be such a flop that I don't think we'll get them. They don't get there organically by way of natural forces of supply and demand. There has to be a willful attempt by the Federal Reserve to push them below zero. But I think they've learned that there's diminishing returns in that strategy. The notes on a 10-year have been in trending down for the last 13 years, since topping a little above 5% in 2007, and I don't see any strong evidence that downtrend is about to change. The 10 years currently at 0.9%, but I could see a relapse sometime over 2021 down to 0.2%. But negative, and before that, we may actually see the 10-year rise as high as perhaps 1.1%, 1.2%, even 1.25%.
Are interest rates in the mortgage market likely to stay low?
I think so. The mortgage illusion is a big piece of prosperity, or the illusion of prosperity, and of course, whole new political things are kicking in. I saw an announcement the other day by the shysters at J.P. Morgan Chase that they were freeing up. It was a lot of billions of dollars for mortgages, essentially to people who can't afford to buy homes. And we've been there before, but of course, Morgan, with the most cynical calculation you can imagine, is saying we're gonna give as much money out to primarily blacks and Hispanics as we can, and they're claiming to be addressing racial issues, but the simple issue they're addressing and subverting is the idea that housing loans be made to people who can afford to pay them back. And one of the reasons we had the 2008-9 collapse was that there were too many loans to people who fell outside of that very fundamental category. So yeah, you can count on mortgage rates staying low, because it's the politically most expedient thing you can do to pretend that the economy's doing all right.
In Canada, the Canadian Housing and Mortgage Corporation has a stress test for mortgage applicants, in that you have to show if mortgage rates went up 2 to 5%, you'd still be able to afford it. Would that be a good move in the U.S.?
No, stress tests are sort of make-believe, and they don't really factor the Six Sigma stress that the system could actually be under. I think they're pretty conventional. You could say that the FDIC would meet a stress test, and it has, but only when 1.5 banking entities are in failure. But you get too many more than that. A couple banks fail, and they're really on the ropes. So any stress test necessarily neglects to consider the cascading effect of a little bit of stress somewhere in the system.
Crude oil has recently seen some price volatility. Is this price volatility likely to continue?
Well, I'd love to feel sorry for the Arab oil producers and the Russians and the Iranians, but I just can't bring myself to do it. They're struggling to keep crude above 40, and of course, for most producers, it's not profitable there. They can't produce energy resources profitably at those prices. So, there's always a geographical wild card there with crude. You don't want to be short it willy-nilly and just thinking, oh, this is going to make money over time, because geopolitical risks and supply disruptions are always possible. But when you look at it from the standpoint of ordinary factors of supply and demand, they're barely propping crude above 40, and crude is currently trading, let's see where we've got it, just a bit above 40, but I think it would become, by my technical runes, it would be a short sale up at 45.76 a barrel, so we'll call it 46. It's not necessarily going to get that high, unless it's got some sort of there's some sort of extraneous shock, but I would love to get shorted around 45.
What's the latest on the agricultural markets?
Well, it's kind of a mixed picture. If you look at wheat, the monthly chart is bullishly impulsive. It looks great. But corn, on the other hand, is still in a bear market. It's trading around $4.10 a bushel right now, and we need to see something like $5.23 to break it out. So it's really kind of a market by market, crop by crop phenomenon. But I don't see anything particularly bullish coming in the agriculture sector as a whole. But I think it'll hold its own.
Do you think the various states are likely to open up amid this COVID scare, and could this be good for the stock markets and the U.S. dollar?
No, I'm kind of looking at the opposite, really. Biden has been more than just dropping hints that we were going to do away with COVID in his vision anyway, with a real deal lockdown. And I think California and New York are kind of a test run. You've got a lunatic in New York in the form of Cuomo, who's with him the whole idea of locking down is a religious mission. I don't think Biden is as much of an extremist as Cuomo, but there's no telling really whose advice Biden's going to be following when the time comes. It was always said that the Democrats really wanted a lockdown because it suppressed the economy and therefore Trump's chances of getting reelected. But now there's more purity really to the decision, and I guess most of us are just hoping that Biden is not a Gavin Newsom type lockdown guy who tells you how many people you can have over for Thanksgiving dinner.
Which sectors are you keeping a close eye on?
I'm always fascinated by the dollar because that's where it all begins and ends, really. It's the one market that's hugely beyond the control of the Federal Reserve. And if it should ever slip out of control, meaning, in my estimation, downward, that would be the beginning of, if it should take off at the trend line I was talking about earlier, that could be a harbinger of the deflationary pressures that would be there on debtors. But, otherwise, the markets are such a mixed bag. I think that the expansion of the Russell 2000, which is an aggregate of a lot of small cap stocks, it has shown you the bankruptcy of imagination and ideas on the part of the chimpanzees who run all the big money, the portfolio managers. When they get a mind, when they say, "Hey guys, we bought these FANG stocks, these mega cap tech stocks to death. We need something else." Well, they gravitate towards small cap, not because higher price multiples are justified in that sector, but simply because they've sort of run their course with the previous idea of buying the growthies. So it's I would say the torpedoes money that we're seeing go into the Russell and the small caps right now is, I wouldn't call it quite desperate because there's so much of it to push it higher, but that's where you're going to see the market stall out.
I just saw a headline that said U.S. companies are stockpiling cash. What do they hope to do with that cash?
That's a funny way to put it, stockpiling, because when you stockpile, it implies that you're stockpiling it for something, but they're stockpiling it because nobody's got a clue where to put it. And I don't care whether you're talking about some of these mega cap stocks that are sitting on 10, 20, even 30 or 40 billion dollars of surplus cash. Nobody knows where to put that money. Buffett doesn't know where to put that money. Is it even possible to say, well, I think this will be safe or that will be safe? So that's a good argument for Bitcoin, by the way. And Bitcoin seems to be doing better than gold these days. So I think Bitcoin is an outright fraud, but I'm hugely bullish on it. I just think it's going to go. I just question that there's even a dime's worth of value behind all the Bitcoin that's been accumulated so far in this world. So that's where I think a lot of bets are going to pile up. I see Bitcoin maybe as the one can't lose proposition. Gold and silver can't lose over time, especially with respect to holding their purchasing power. But Bitcoin is just starting to warm up.
Are you a fan of averaging when it comes to buying gold and silver?
No, I just if you're going to buy it, just buy it. Don't. You may buy it on a plan where you get X ounces per year or per month or whatever, but don't sort of get locked into a loser's frame of mind and think that averaging down is going to bail you out. Just buy it at any price, really, if you believe in it, and to the extent that your portfolio is exposed in bullion.
Are there any catch plays here? I know with the change in administration, if the Democrats are declared winners, will they go towards this so-called green revolution or green wave, or is that even possible?
Well, I think that I mentioned earlier that the institutional chimpanzees are totally bereft of ideas. So the one good thing about that is that everything that's completely in your face obvious is going to work. You know, when the market collapsed in March, and a few days later people realized that the Chipotle was still selling burritos, everybody piled into Chipotle, and that story hasn't stopped, you know, so it goes to on and on and on to some ridiculous height. So as far as a Biden win, for sure, it's going to factor into all of the story stocks that you would that come to mind that are associated with a quote unquote green America, or well, I guess you know, the fracking stocks are a short sale, and the energy stocks and all that. So the big themes that are going to develop are certainly playable, but they do have their own. There's a self-limiting factor there because they're all, you know, they're all negative growth, and they're all just literally full of hot air.
Do you think that this push towards solar and other alternative energy sources is going to be worth the time and effort? Ontario tried to do that. They went from having the cheapest energy in North America to the most expensive.
I think you have to look at Germany really as the cutting edge there. I mean, Germany, for whatever reason, they've always done things honestly. You know, when they brought East Germany on board, they offered a conversion rate, Ostmarks for D-marks, that was 1-to-1. You know, they weren't going to print up a lot of bogus money to give their Eastern European, East Germany brethren the idea that they were somehow rich. So Germany, even with energy policy, has tried to do the right thing. In purely economic terms, I guess you could say it's suicidal to announce that your nuclear is going to be phased out completely, no nuclear in development. And so here's this company that is the manufacturing powerhouse, whether manufacturing onshore or off, saying we can absorb huge extra energy costs and still remain competitive with the rest of the world. So I see, you know, I think the world's only generating 3% of its power with what you would call renewable. It's not actually renewable, but with non-fossil fuel energy or sources. And we've got a long way to go, really, before we can replace fossil fuel. So in that respect, Biden's announced his declared policy is at odds with economic reality. I mean, you can't phase out fracking and fossil fuels without having an enormous economic impact on the world. And it's not like the global economy is so strong that it can stand up to a $20 or $30 trillion whack or whatever it would amount to.
We've seen Volvo has developed the world's first practical electrical heavy haul truck. They have two different models, but are they really practical if you're a heavy hauler taking materials across North America from LA to Toronto?
Well, there's that fallacy that all these electrical trucks are running on, you know, it's like they're running on solar panels or something. Now, as we know, when that truck plugs in to get recharged, the power has to come from some source. And, you know, by and large, that source is fossil fuel. So, and I've read something that sort of breaks down the cost of the environmental costs and the economic costs of producing a lithium-ion battery. I do think that the next big thing is going to be in the storage sector, or maybe even conductivity, based on some of these amazing things that are happening with graphene in particular. the newer variation called twisted graphene, which has such remarkable properties that it puts it almost up there in the cold fusion category of technological miracles that are possible. So that if I have a bullish view on the global economy, it's kind of apart from the financial side of things, which is not looking too good, it would come through a technological revolution in energy, in power generation and storage.
Could you see hyperloops replacing airlines for domestic travel?
I don't know what's going to replace domestic airlines for travel. We're locked into the COVID-19 mentality really hard right now, and maybe getting ready for lockdown version 2. And these airlines are dead. If you look at them from a purely economic standpoint, their deadness is going to kill a lot of investors. The bonds that paid for the construction of New York's transit system, for one, have to be paid. The bondholders, the interest they receive is paid out of revenues generated by the subway system, and so the same thing with the airlines. There's a lot of infrastructure there that's underused, and it's not producing the revenues to service the calculations, the debt that went into expanding fleet and all that. So I don't know. There's nothing that can replace the airlines in toto. I mean, Americans what we've replaced it with really is Zoom conference meetings where nobody flies anywhere.
Do you think the Zoom phenomena will be permanent, or will it fade away because people really enjoy personal contact?
Well, it's here to stay, and to be a little bit cynical about it, I don't think it hurts doing business too much, because we don't really do much business. We've got the business of America is really shuffling paper. It's kind of selling life insurance to each other, or at best maybe, shining each other's shoes or doing each other's nails. I think there's so much inflated, I'm speaking of, let's say, the real economy in terms of a cobbler who can fix your shoes, or a farrier who can shoe a horse, or a plumber who can fix a toilet. That's the real deal. But when you appreciate the fact that the biggest fortunes have been made by paper shufflers, deal makers, it's beyond question really that the main business of this planet is shuffling paper. It's just a lot of financial smoke and mirrors. And the best proof of that is a derivatives market that aggregates to something like $1.5 quadrillion to service a global economy that's a tenth that. So again, all the evidence says that nobody really gets much done in this country anyway. It's all a big charade, other than, the real things like farmers who produce, but we don't produce much. We produce a lot of smoke and mirrors. And so I don't think Zoom, the fact that we're not having trade shows these days and that meetings are not getting conducted face to face, it's no great loss. It's a huge loss though for the arts, and I know people myself who were involved in trying to develop something that would get, that would allow people to see plays and to, I guess, to have live entertainment, and it's not possible. When it's one thing for a bunch of business people to be sitting in a virtual conference nodding their heads, but it's another when a performer gets up on stage, whether it's a comedian or an actor or whatever, there's really an exchange of energy between the performer and the audience. And there's no question that the very nature of performance and of performance art is seriously impaired by the virtual distancing that's being attempted now.
Yeah, you feel a concert if it's loud enough. And I went to a Who concert where they literally blew the front 4 rows back because they were so loud. Drag racing, I love the noise. Air shows, I love the noise. And you don't get that experience when you're just watching it on video.
The Who, in particular, I went to the Isle of Wight Festival in 1970, and the Who played there, and there was kind of a wind blowing back toward the stage. And even though there were a lot of groups with a lot of sound power, the Who brought their own equipment, boy, and they just about blew people out of their, out of their pup tents. So obviously the music festival itself is testimony to the power of live performance. And I don't care myself what happens to business, because as I said, business is all a charade anyway. But the arts are very real, and they're going through the most difficult period ever, having to come up with a format that works, that doesn't have the live element present.
Yeah, and take a look at professional sports as well. When you're not in a stadium with 65,000 other people, it's just not the same.
It isn't. You tune in on a baseball game, and some guys just parked one in right center field, and he takes his lap around the bases, and it's visually it's the same, but you know that it's got to be a letdown for the guy that hit the zinger to know that there's maybe who knows how many people out there in TV land watching, although not many these days apparently, and it's nice to have an audience to try for.
Well, yeah, they said the NHL playoffs, NBA, and so on had drastically reduced audiences, and they think some people brought up political reasons for it. But no, it's just you're not going to the pub to watch, the game, or you're not going to the actual game. It's that physical presence of people all in the same wavelength. I think that's the real attraction. And that's just not there when you're watching on TV by yourself.
Yeah, although I think you really do have to give the NBA credit for shooting itself in the foot after it was already on a gurney to begin with from the pandemic. I mean, I think a lot of people have sort of tuned the NBA out. And the most damaging story being that the NBA has essentially said, "Screw America." We got many more fans in China, and if they're just one more U.S. institution that's going to play ball with China, and of course Biden will, because they've got some good. I'm sure they've got some great videos of Biden or Biden's son. So Biden will play ball with them, but if all our business is moving to China, as opposed to what Trump was trying to do, we're in bad shape.
Was President Trump right to call China out to say we don't deserve to give you, or you don't deserve to get any special trade deals anymore? You've been exploiting us for years and claiming you're still some kind of developing nation. Was he right to call him out?
He was so right and so brave, so courageous to do that even the Wall Street Journal came around. All right. In the editorial world, you will never find a place that supports free trade. I use that word in quotes, more strongly than the Wall Street Journal. Anything that in any way curtails trade or threatens to do so, it's an article of faith with them that it's bad. And you get good support for that from David Ricardo, Classical Economics, which talks about comparative advantage. If some sleazy country wants to subsidize its business so that it can undersell you on steel or cars, well, you buy it. You let them do that, all the subsidizing they want, and don't complain about it, because that leaves you with savings that you can put into your own capital structure. You can build modern automobile plants. You can automate so that you're producing. You can undersell the Chinese in something. So the problem with Ricardo and Classical Economics is that we've so seriously skewed the incentives to invest in things that produce that we don't really enjoy the advantage of those savings that we reap by by buying subsidized products from China. All right, so here Trump comes along, and he goes to war with China, and the public instantly recognizes this as a good thing. You know, Trump made it, he just came out and said it. They're sleazeballs. You know, they've been stealing our secrets for a long time. They require that any U.S. company that does business with them share its patents, divulge them, and we've seen what they've done with them. So the Chinese they've been complete sleazeballs for so long that when Trump started enacting these tariffs, the Wall Street Journal didn't go to war with them. They basically, I would say their resistance was relatively moderate compared to what it might have been prior to Trump. So Trump called a spade, and I think the world pretty much agrees, even if not much of it is courageous enough to get out there and say it as he did, that, you know, there's no, even if we get some economic advantage from trading with these scumballs, over time, they're going to bury us. So, you know, let's put an end to it.
China keeps demanding that Canada and other nations respect them, no matter what they do. Isn't respect something you earn, not demand?
No, it's a threat in this case, you know, and no one doubts that they will slowly, they'll over time develop the ability to make good on that threat. Right now, it's sort of a diplomatic, what passes for diplomacy in the world of China, but it's sort of a midway point between you know, promoting cooperation in trade and reaching the point where the extreme opposite, where they set up a naval blockade of the Pacific, and we discovered that they've come to dominate the sea lanes all the way to Hawaii, which is what they're I think intending on. So you know, it's the Chinese are really, they're just, it's a threat, and I think they can back it up.
Rick, how can people find out more about Rick's picks?
Well, if you go to rickackerman.com, at the top there's something that says Start Trial. So if you click on that, you can get 2 weeks for just $1, and that will get you all of the good stuff. You'll get access to my trading room, which, as I mentioned, draws great traders from all over the world, and the coffee house, where it's a more informal discussion. Today we had some spirited discussion of Bitcoin, but in the trading room there are really good actionable ideas, and there are each day my what I call touts. These are sometimes actionable forecasts for E-mini S&Ps, NASDAQ, Russell 2000, the Qs, the diamonds, and some other popular trading vehicles. So just, again, rickackerman.com, just click on Start Trial and you're there.
Rick, thank you so much for being on This Week in Money.
Well, thank you very much, Jim, for inviting me. It's always a pleasure to talk with you.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from South Florida. Now we'd slide over to the southeast of Florida to speak to David Skarica in the Bahamas next.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. He's speaking to us from the Bahamas. Welcome back to This Week in Money, David.
Hey, thanks for having me.
David, for new listeners, can maybe you give us a bit of a background to Addicted to Profits?
Well, actually, just so you know, I'm in the midst of doing a bit of a restructuring on the site right now. I'm going to make it more media-oriented with actually podcasts like these that I also do myself, vlog, video casts for paying members, interactive things. I do a lot in venture capital as well. So with, I think this gold and silver bull market going to occur for years, I'm also going to get a gear towards kind of accredited investors who are interested in private placements and IPOs. And to be blunt with you, the consulting fees I get from certain companies are much more money than I make off the newsletter. So that's another reason I'm gearing in that direction. But I do think you look at the success of people like, and I don't expect any to be anywhere near this range, but like Joe Rogan or people, or look at Real Vision in the financial world. Things of this nature I kind of think are the future. So that's why I'm gearing to this being more media than just like a written newsletter. But basically the long story short is I started very young. It's funny, this actually we can relate to everything going on in the world right now in a second. But I started writing the newsletter when I was only 21. That was 1998, so you can figure out how old I am now. One of the reasons I started it at that age was I thought in the late 90s the stock market was in a bubble, and I kind of wanted to be on record as having to kind of, predict this bubble, right, that had burst. Actually, I had a book published in 1998 called Stock Market Panic. It was my first book, and it kind of predicted that, that gold, silver, and precious metals were bottoming, and the tech stocks in the U.S. stock market was topping. So that's kind of how I got started, and what got me interested on that side of it, kind of being a contrarian value investor. I don't consider myself a gold bug, but, I am someone who's been bullish on gold a lot of time over the last 20 years. I was reading these books. One was called Plague of the Black Debt by James Dale Davidson. Another one was called Bankruptcy 1995 by Harry Figge. And I think it pertains to what's going on today because these books were written kind of in the early to mid-90s, and they were about how governments in the West were going to go bankrupt because of too much outlays, too much government debt, etc. And they were both kind of saying everything would happen, by end of the decade. And instead of, 5 years, it's taken 25 years. But I think we kind of are in that end game now where, the debt to GDP in the United States is 120%, including the states and local governments, to 150%, which is, that's right up there with the countries we consider basket cases, like, say, Greece or Italy, et cetera, or financial basket cases. So, I think that we kind of now have reached that tipping point in government debt around the world. And like I said, to me, it's kind of ironic. They're giving you a quick background. I guess my claim to fame too was I got my securities license to trade stocks in Canada when I was 18. I guess that was in 1996. I was the youngest person ever to get it. So that was kind of my claim to fame at the time. I don't know if anyone else has surpassed my, unofficial record. But anyhow, I just think it's funny because now this kind of reason I hope kind of started the newsletter, got into gold and precious metals, is now kind of come full circle, and it's taken a lot longer than I thought, or I think a lot of people thought it would. But I do think we're kind of in the end game now. And just to end off on that note, when I was thinking that way, that if you would have told me that the debt, which was roughly $4 trillion, when I got interested in the financial markets in the United States, would go to $27 trillion, and interest rates on the long bonds would go from 7% to under 1%, I never in a million years would have believed you.
David, let's take a look at gold and gold miners. First of all, if you're holding gold, do you like bullion certificates, hiding it under the carpet? What do you like to do with it?
Well, if you are going to do something like the GLD, that's really trading. Because, the whole thing is they only own paper certificates. They don't own the physical. I'm not really one of these doom and gloomers that, everyone's going to call in the physical at some point. So, a lot of those guys that own the GLD, they're big funds, guys like Soros or Paul Tudor Jones, and they're not going to be calling in the physical, right? So, I'm not too worried about that. So that is a simple way. But I would prefer that you would own some physical. Or if you were to own a fund, I would own the Central Funds of Canada. I think, Sprott, check it over. And it owns physical gold and silver. And the one thing I like about the Central Fund as opposed to the GLD is it owns silver as well. So instead of having to buy the GLD and the LD, you just own the Central Fund and have exposure to both. And when the sell-offs happen, the nice thing about Central Fund too, because it's a closed-end fund, it's not an ETF, it can trade at its net asset value, which it has for the last few years until this last move higher. So you can also buy, it's like, you get it, like the comment I made at the time at near the bottom, a gold and silver was like, it was like you were buying gold when it was 1,200 for 1,100, and silver when it was, 12 for 10, right? That sort of thing. So, those are ways, obviously, like I said, I own the physical, I would own the physical, and then I'm kind of partial to the miners. I don't want to call it a conflict of interest, but I guess my bias is that, again, I do financing to participate in them in myself and help consult with junior mining companies. So obviously, I have an active role and positions in the industry. So, but it's just right now we're kind of really in a good spot for them because we're early in the bull market. A lot of them are not priced for these kind of heady gold prices. Like they're priced for much cheaper gold prices. And, so I think that's a thing. And actually, this is a comment similar to I made in another interview that I did recently that it's really just basic math too, that it's easier for a small cap company that say has a market cap of 5 or 10 million to go be worth 200 or 300 million with some good news, some good drill results than, for Barrick to go up 20 times, right? Because Barrick is already like, a company that is, established. And then also on top of that, if you do, again, basic math, that if you get a company that, say has a few 100,000 ounces in the ground, it's a lot easier for them to build that to a 2 million ounce resource than a 2 million ounce resource, say, which is a large resource, going to 20 million, right? So, and then there's more incentive and there's more access to capital as gold prices are higher, and you can have those deals. And so you get the combination of, see, some company able to increase the resource by tenfold, plus the price of the underlying commodity or metal going up 50% or 100%. That's when you can get these huge gains of, 500%, 1,000%, 10,000% in these types of stocks. And I actually had one company, the disclosure is, I own stock in it, and, did do some consulting for them. So these companies have a lot more leverage. And, the caveat is, I don't really think they're long-term holds. When you have this period of, say, they have a find, put something into production, the period of kind of outsized gains is kind of like the 12, 18, maybe 24 months. So it's not like, okay, if you're somebody who doesn't want to trade, you just want to own Newmont or Eldorado or Agnico Eagle or whatever it may be for 10 years, because you think, 5 years, then the juniors probably aren't for you, because I think even in the bull market, you're looking at holding a lot of smaller caps 1 or 2 years, not 5 or 7 years. I think the best analogy I heard it was Doug Casey called them flaming matches, which like a match, they kind of the flame fizzles away. So because you'll find that, and you actually seen that in some just corrections since the summer, that when maybe the large caps only fall 10, 20, 25% in the correction, some of these juniors can fall 50 or 60%. And then if a junior has, I don't know, some bad political news, maybe the jurisdiction they're in doesn't let them mine anymore, or they have bad drill results, they can collapse even in a bull market. So another rule I have for the juniors, you got to double, triple, quadruple. Please take your initial capital off the table. Just common sense. If you got 10,000, a junior goes to 30, take 10 off. You can, and then if the house is money, you can let that 20 grand ride. And if it does become a huge find, great. You're going to make whatever. And if it does become a flaming match, and flames out, then, you haven't lost any money. You only lost your game.
What's your outlook on silver right now?
I'm still more positive on silver because just quite simply, it's the gold to silver ratio. I think silver's underowned too in the retail arena. I think the stock market holding up and being so strong, and crypto's rallied as well. I think that's kept a lot of retail investors. But I'm thinking more on the stock side, that like I said, technology stocks being strong, that kind of retail market that may be interested in silver, small cap silver companies, they're still kind of infatuated with the stock market. So once there is another drop in the stock market and gold and silver rally, similar to maybe what happened in the spring after the initial drop in the markets, I think that will attract a lot of buyers. And then this is quite something, this thing called the gold to silver ratio, which right now is trading around 75, 80 to 1, and historically trades about 50 to 1, and at the lows will trade, at 20 to 1, 15 to 1, and at the highs, and actually this spring it went to an all-time high of over nearly 110 to 1. So it takes 110 ounces of silver by 1 of gold. So if it gets back to one of those, like, 25 to 1 lows that you see in bull markets, that quite simply means silver will perform by 3 times, and that would mean, like, say, gold could double from here. Well, that means gold and silver could go up, 5, 6 times the value. So that's, let's say gold is a nice round number, could go to 10,000 for some kind of flow off in the bull market. Well, that means silver could go to, 400 or 500, and you're talking that's roughly, 20x on your times on your money from gold, and silver, and that's only about 5 or 6 times on your money on gold,
We'll have more with David Skarica when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with David Skarica. David, what's your take on the U.S. dollar?
I think short term, I'm not that bearish. It's pretty oversold. Sentiment is pretty bad because of that big drop. We could see some kind of rally. Another issue could be liquidity or lack of liquidity helping the U.S. dollar. With it looks like the U.S. election playing out as the Democrats winning the presidency with the Congress, but it's a smaller majority in the Congress, and it wasn't like Biden's victory was some clean sweep. Trump was closer than most of the polls, and I hope people stop listening to polls, by the way, predicted. I think that combined with, the Republicans having the Senate means you're not going to see, the $2 trillion, $3 trillion stimulus a lot of people wanted to, which, could really help asset markets and really maybe crush the dollar because of all the money that would have to be printed or loaned or whatever, right? So, anyhow, that kind of thing, with maybe a stimulus more, say, in a $500-600 billion range, I think that the market might get disappointed in that and actually see the dollar somewhat rally because it means a smaller deficit and whatnot in the short term. So I think you could see a short bounce in the dollar, but I think ultimately, because they're still going to be running these gigantic deficits and they're going to be printing and spending money no matter what happens. So I mean, the dollar at some point will turn lower as well. And I think there's got to be this realization. We're still seeing very high unemployment claim numbers, and a lot of these small businesses, which, can't really survive these lockdowns, I think what you're going to see is them kind of roll over and, in terms of the economy, not really rebound like people think. Look at a place like Manhattan. A lot of those restaurants and small businesses, even after coronavirus is finished, they're not coming back because the city is kind of emptying out a bit. It takes a lot of capital and risk, for someone to set up a small business. And I think after the way governments are behaved during this whole thing in the last year, people are going to be a little more wary to take this risk when the government can shut you down at any time without warning. So I just think that at some point, this economic recovery that a lot of people are expecting will not really, occur. And the dollar needs that to be stronger because the U.S. runs big budget deficits, big current account deficits, big trade deficits, and actually, Europe definitely runs big budget deficits. The European Union runs a trade surplus, and some of the countries have current account surpluses in Europe. So, I would look at that at some point. The dollar's going to roll over, and I don't know if it'll be the first or second quarter of next year or a little later, but I definitely think that maybe after we kind of work off this oversold condition and maybe we get a little bit of short covering in the dollar, clear some of those bears out, we will be, roll over. I really think that this is like the UK, in, post-World War II. We saw the pound go, I think in the 30s, it peaked at $5, took $5 to buy a pound, and now, we're at 130. So, I think that we're seeing that kind of secular top of a superpower, but these are long-term trends which can take decades to play out. The U.S. began to fade after the UK began to fade after World War I, but it really wasn't until after World War II, nearly 30 years later, that, its eminence and role as the world's superpower, declined. So, who knows how long this could take. A lot of people think it's going to happen overnight, but this could take another 20 years to play out, right? So, but I think ultimately, in the next few years, the dollar will be headed lower.
The Dow, how's it going to do, and how does it compare to, say, the NASDAQ with technical stocks?
Well, right now you have this trade going on. The NASDAQ has really lagged on this rally, and the reason being is, the Amazon, the Googles, the Apples, they've all benefited from the lockdown because people are just sitting around on their phones. Netflix would be another one, watching Netflix, watching Google, watching, watching YouTube, watching, Amazon Prime, whatever it may be, or ordering stuff off Amazon and other online companies, or using Zoom. And those companies, as we kind of return to normal, even without a vaccine, usually the history of the, viruses is they last 12 to maybe 24 months at most. So, within the next year or so, we're probably going to go to some normalcy. People just won't be in their houses all the time. So I think the NASDAQ, from that standpoint, in the short term, is going to sell off because I think that is going to become more apparent. And we saw airline stocks, casino stocks, some of the old economy more Dow type companies rally recently because the end to the lockdowns, with a potential vaccine or, Corona coming to an end probably sometime next year kind of helps them. But either way, the market is extremely overvalued, and we could see it kind of sell the news thing. Once we're kind of through the virus, either via vaccine or via the virus dissipating, it kind of might be like, holy shit, excuse my language there, holy moly, the economy is not that much better, and these stocks are trading at ridiculous valuations. So you might get kind of a sell the news type scenario.
The Fed has said not too long ago that it plans to keep interest rates ultra low for the next 2, 3, 5 years. Is that really possible?
Yeah. I think that's going to happen, and I think what's going to happen with that is they're going to have to do that yield curve. You're going to have to do that yield curve suppression, and that means they're going to have to, I think, try to buy the long end to keep, because that's really what matters. Even though they can keep rates at zero. Well, remember, when the crisis happened in Greece and Italy, 2011, 2012, the European Union rates, they were still zero, right? And it was the long end that spiked to, 6, 7, 8% in Italy that gave them a lot of financial problems at that time. And then, so that's going to be kind of an issue. And the question will arise is, can they keep that down? Because, well, let's say this debt gets completely out of control, goes to whatever, 35, 40 trillion, 200% of GDP. I think that's when bond investors might want more yield because they're going to say, hey, you're a credit risk, and the Fed will have to in turn try to buy those bonds to keep the yields lower. So, no, short-term rates, they can keep those lower. They did it from 2009 to 2018. They can keep those low for a decade. But the question is, will the long-term rates, which is where most of the debt is issued, kind of agree with that and allow them to do that. And remember, either two things will happen. They'll have to let, long-term rates will spike. The government will basically be broke, and you'll have to do some massive form of austerity, or you'll have to print a huge amount of money to keep the rates low, and that means a huge devaluation in the currency, right? And the devaluation may not happen in terms of against the euro or Canadian dollar, because those currencies and governments are kind of basket cases as well in terms of the debt they're running up. It may happen against, gold, silver, commodities, cryptocurrencies, whatever it may be. So I think they can keep it low, but the question is at what cost to the value of the currency and inflation, etc.
The presidential election in the U.S. is contested. Gore versus Bush was the last time there was a contested election in the U.S. Any similarities between the markets then and now?
Well, it's a little different because by then the dot-com bust had started to burst, and that kind of accelerated. If you go look at what happened in November, December that year, that kind of accelerated that bust to the downside. The NASDAQ really had a hard sell-off, where this time we got the markets right near their highs. And I think part of the reason they were near their highs is they were actually hoping for kind of a blue wave or whatever they call their blue sweep, because they wanted all this kind of fiscal stimulus, right? And when the polls were so jaded that it made people think that that was going to happen, and it looks like that's not going to happen. From my perspective, is I don't really want to get into the political side of it, but the actual process itself, to me, makes the U.S. look really bad. It makes it look like a banana republic in terms of, it looks like, I don't care which side of the aisle you're on, if, it looks like there was some kind of shenanigans going on with the votes. The fact that, forget even that, if you don't believe that, the fact that it should not take 6 days or a week to count all these votes, that is ridiculous in this day and age. If you watch a British election, you'll see, when they put all the guys on stage, when they announce the results, you'll see those come out at like 7, 8 in the morning sometimes, UK time, because they just sit there and they count the votes all night, and it's finished by then. So I think the whole process was really embarrassing. Like I'm telling you, I've seen, the elections in Central American and South American and African countries that were better run than this. So I look at it that way. Again, to me, that's another negative aspect towards the dollar, because when you see this kind of banana republic type action in their electoral system, it cannot cause you to be confident to put a lot of money, into the U.S. dollar or U.S. debt, etc. So that's the way I look at it. I think the process itself and the way it's played out is actually more embarrassing than the actual maybe result itself.
What kind of action is happening with the cryptocurrencies?
No, I think they're just getting the bid, until this recent sell-off in, say, gold, silver, and cryptos. It's just this bid, that this realization that these governments, I talked about Harry Figge earlier in Bankruptcy 1995, that book, that finally that is coming to fruition, that these governments are broke and they do have to print money to keep interest rates ultra low. Remember, right now, if interest rates are normalized, and this isn't just the United States, this is Canada, this is Europe. If they went to 3%, all these governments are broke. They cannot even afford 3% interest on their debt. They'll be paying 15, 20, 25% of their budget in just interest payments if the 10-year bond is 3-4%, right? So I think there's this realization that everything, like I said, everything has to be done. Money has to be printed to suppress those yields so the governments basically don't go into insolvency, and that ultimately means inflation. It means devaluation of currencies. And I think crypto is a form of currency, especially Bitcoin and the larger ones, and that's seeing a bid as well. It's not a huge market. It's a small market. I'm not a huge crypto guy myself. But especially being someone who's in gold and silver, and I can get my leverage from the gold and silver, junior mining stocks. I really don't need to go into hyper leveraged cryptocurrencies, but I do think it is an asset class that will do well. I have one company I'm invested in that does some crypto mining, but anyhow, I think that will benefit ultimately as well. And you're kind of looking at too, like millennials, we talk about them chasing the stock market. They've chased a lot of these tech stocks in the last 6 or 9 months. Well, millennials are also, because they're, they know, technology, will probably be attracted to cryptocurrencies as well and begin to chase them again, just as, kind of what happened in 2016, 2017. So, I'm bullish on them. Like I said, I'm more of a gold silver guy, maybe old fashioned, but I do think that, and a lot of smart people, Reaugh Paul runs Real Vision, Paul Tudor Jones, one of the great, managers of all time, hedge fund managers, Stanley Druckenmiller, they're all bullish on Bitcoin and crypto. So that's probably a good sign for it as well. So I think it'll go up just like other commodities. But I think the price of wheat is going to go higher. I think the price of sugar is going to go higher. I think, like I said, oil and gas, after we kind of get this shakeout right now, getting rid of the excess supply, everything, all these commodities and real assets are going to go higher because of printed money. And crypto is just one of those assets.
Any thoughts on the so-called Robin Hooders, people who have quit their day jobs and are now day trading probably in their parents' basement and are ignoring the traditional investments, say gold and silver?
I think what will push them into it is actually not so much the crypto thing, is that when, because the stock market is so overvalued, when we see another decline in the stock market, and let's say that coronavirus, we're continuing to kind of, these numbers were to be a bit out of control, vaccine to full production doesn't happen, happen to the end of the first quarter, the current administration, meaning, or potential current administration or new administration, Biden, that the Democrats are much more adept, and we've seen this in the States, in the United States, and, Canada's like this too, Canada's, more liberal than, or to the left of the States. That position on the, on the political spectrum is more likely to lock countries down. Perfect example is UK has a conservative government, but again, the UK tends to be to more to the center or left of the US, and Boris Johnson has again locked the country down. So if you were to see a lockdown in the country, the market is going to tank again, and that could push them into gold and silver, because all of a sudden their stocks, go down and they can't chase them. And like I said, I think a lot of the Robin Hooders would be actually really attracted to juniors because, they're millennials. When you're young, you tend to be attracted to things that are more volatile. And I think I mentioned my age earlier in the late 90s when I started. My generation was young and we were all in the tech, or I wasn't personally, but a lot of my generation was, speculating in the tech stocks and .coms, and because there's volatility, and, we were all in our early to mid 20s, right? So I think that actually could really help the Robin Hooders getting into these smaller gold and silver companies because the volatility and opportunities that they present.
You mentioned wheat, I think, and sugar. Anything else going on in the agricultural sector?
Oh, I like most of them. Most of them are pretty depressed because you can't do a lot of mass production of some commodities, especially in in the proteins. Like pork, that sort of thing. Because that a lot of them have to be processed, in factories where people can't right now work very close together because of the virus. So I think you could see a supply squeeze. So I kind of like most of them, but if you wanted to look at pork bellies or anything that is kind of in that kind of protein trade, poultry, etc. I think that could actually do well because you could see these kind of supply shutdowns continuing going forward.
Base metals, what kind of action's going on there?
Copper's holding pretty well above $3. It looks like the shakeout was open. Any kind of decline or smaller stimulus could hurt it, but I still think if some of these scenarios play out and there's like a W bottom in the economy or an L like it did, what we're seeing now doesn't recover that much, even the Republicans in the Senate will be forced to agree to a stimulus, and politically they'll kind of have to do it because they'll look like they're doing nothing for political reasons otherwise. And that could push copper higher because, you're going to see building of bridges, roads, railroads, whatever it may be. And look at the one thing about the new Green Deal, and this is where I will show maybe a little bit of my politics. That's all a scam. Okay, that green economy is nonsense. We've seen it in Ontario where they went all green, and now Ontario has the highest energy cost in North America. When it used to have the lowest, right? Because when they were running on hydroelectric and whatnot. And then there's a great documentary that actually Michael Moore, of all people, funded, who I wouldn't be on the same end of the political spectrum with, but it talks about it. Look at, you need steel and copper and lithium and rhodium and cobalt and all of these things to build windmills, to build batteries, to build, solar panels. And the amount of carbon it would take and the amount of destruction you'd have to do to the earth to, build enough of those things to make the entire economy just run on green is going to basically, in a German university actually did a study on this, is almost going to pollute as much as everyone running their gasoline cars. So that would all be, to me, that's all a waste of time. I think you just have to accept the fact that if you want to live in a modern society where we have like this kind of standard of living that we have, you're going to see just some maybe environmental impacts. And that's basically, to me, that's what you're going to have to accept. But anyhow, so I think, but what I'm saying is that if the Democrats, let's say they could win those 2 seats that are left in Georgia and take the Senate too, and they go ahead with that, that is going to make those base metals go crazy because you need all the things for their windmills, batteries, and solar panels.
Any other sectors that you're keeping a close eye on?
No, actually one sector that's kind of, and it is tech, but it's kind of out of favor, but I don't think there's a huge hurry on it, is 3D printing. I think 3D printing is actually a very underappreciated technology. Actually, being a Raiders fan, the new Raiders Stadium in Las Vegas was basically fully 3D printed. Actually they say it's like the biggest 3D printed, facility in the world. So I think that you really look at that technology because those stocks all had bubbles in 2014 where they went straight up and parabolic, and they've kind of been basing ever since, and most of them are off 80-90% from their highs. And I do think that 3D printing, for anything, cars, shoes, homes, that's going to be a gigantic technology, especially as the cost, like all technologies, continue to come down, etc. I don't think we're quite there yet. And the nice, great thing about these 3D printing stocks is virtually none of them have any debt. So they can kind of survive this kind of, lull in the economy or their industry, etc. So 3D printing is definitely an interesting technology that I would watch. It might take another couple of years to kind of bottom out, but, I talked about the newsletter earlier, so if someone is interested in subscribing and writes me an email, I could give you a few, 3D printing stocks that I like. So, but I really think that 3D printing is something I'm really long-term bullish on, but that's the kind of thing where this is the problem doing what I do for a living is that, in 6 months from now, these stocks are down 20%. People go, oh yeah, you're an idiot, you were wrong, but this is something I'm looking at as like a 10-year trade, Yeah,
I can imagine the day you go to your car dealership and they have a template where you can go to a computer and basically design the interior of the car to the way you like it, and they can print that out and put it on a chassis that was shipped from a factory.
Yeah, or maybe the exterior, as long as it'll probably have a base that you can work around, and as long as it's safe, maybe you'll end up being able to print a car like the one Homer Simpson made in The Simpsons.
Yeah, and look how well that didn't work out.
Well, I don't know. That thing ain't much uglier than Elon Musk's new Tesla van.
David, thank you so much for being on This Week in Money.
Yeah, thanks. And by the way, I appreciate it. If people heard stuff in the background, I'm actually out right now. So I was in a car. Now I'm on the side. We're at a store. So, so if there's a few things in the background, I do apologize, but I think it should be okay.
David, thanks again. My guest has been David Skarica, founder of the Addicted to Profits newsletter, online at addictedtoprofits.net. He writes for the Financial Intelligence Report. He was speaking to us from the Bahamas. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Ackerman, and David Skarica. And thank you for listening. If you have any questions for our guests or the show, you can send them to info@housestreet.com. Now stand by for our company showcase update from American Manganese President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Thanks, Jim.
Larry, the work at American Manganese never stops. What's really cooking around the office these days?
Well, this is probably the slowest week we've had, but it's been busy.
And we were super busy before that, but with the holiday in there, with the uncertainty of the election results, with all the things that are happening out there, the market has slowed down. And companies that are announcing things today are seeing their stocks go down, even though they were good announcements. So it's a bit of a treacherous market out there, but whoever wins, I think anybody in the electric vehicle industry, and recycling is included in that, will benefit. And so that's the way we look. We look at the bright side, not the dark side. And that's up to the voters in the U.S. on who they bring in, and that's all I can say on that, is that I don't think that either way it's going to affect us much. But we're just going to continue on in the same vein we've had. Now, I've had a lot of queries about the timeline or something for the spit out. Well, timelines don't exist anymore. It's where you run into a road bump all along the way because of COVID, because of availability of bureaucracy, those types of things that take the time. And I can tell you that we're working on the financials because we have to have a special general meeting to approve this. And we'll have our regular AGM at the same time. So that's the next step that will happen. And then we've got to get approval on what the split's going to be, what the spin-out's going to be, what ratio it's going to be in, and then we have to have approval by a judge on the spin-out. And, so all these things, these people are not easy to reach. We just have to keep trucking ahead. But otherwise, it's moving along smoothly. We got the 43-101 done. We're good ways through the audit, and then we're ready to go on to the next step. But for me to put out a timeline, it doesn't mean much. There's a lot of things that affect a timeline, and we've got them all. So we just have to keep trucking ahead. Now, when you're looking at the general market, we're seeing kind of a quasi up and down market that seems to not have a lot of direction, and so it's something we have to contend with. I think when the election results are over with, and that may take another few weeks, in my opinion, then we'll have to just go along with everything that's going on out there and just keep doing the best we can. And so next week, we're looking forward to making a few announcements, and I shouldn't say a few, one or two maybe, but the whole crux of the whole thing is that we're continuing to work, and I want people to realize that the other query I get daily is checking somebody else's press release on recycling batteries. Doesn't matter if they're big or small. They all say the same thing, that they're going to recycle batteries, and they're getting 80 to 90% recovery. They don't say that that includes the entire battery pack itself or whatever that is. They don't talk about what their metallurgical process is or what the recoveries are getting or anything like that. Is all I can tell you is ours is solid. We do get up close to 100% recoveries and purities, and that's hard to beat. And so it's I can't get myself too detracted on what everybody else is doing. We got to wonder what we're doing, and that's why we're moved into that next stage of morphology of the particle size, and we've bought that equipment, and as soon as we can, we'll have that up and running. Because we want to be ahead of the pack as far as any ability to, encourage these battery manufacturers and EV car manufacturers that this is a route they should take, because we can give them a solid closed circuit service with nothing going back into the environment. So and that seems to lose its opinion. We've made many announcements on our progress through the pilot plant right from the very beginning. We've probably made about 200 announcements on the results of the pilot plant. And so we try to keep everybody informed so that they feel solid with our solid platform and our solid technology that we use in this regard. It has been a very quiet week, so I don't have a lot more to talk about. Next week I expect things will start to return to normal a bit. A lot of people took extra long weekends with the Wednesday holiday, so a lot of people are not at their post. Traders are not trading, and we just have to wait this little squall out, and away we go.
Larry, Volvo announced that they've come up with a viable medium-range heavy-haul truck, 2 different models, good to 300 Ks, that are purely electric. Does that tell you the kind of trend that American Manganese is looking at?
Oh, that's a super trend. It's a lithium-ion battery that's in there. It'll eventually come into our hands. You read, where there's 8 million vehicles going to be on the road at the end of this year. And that's a lot of batteries stacked up. Certainly, our going after the scraps is the low-hanging fruit, and so we welcome whether it's trucks, long-haul trucks, locomotives, ships, boats, whatever. They'll all be using lithium-ion batteries sooner or later.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company that developed a process for low grades of manganese in the U.S., and I'm talking 3% grades. We were comparable at the time of our pre-feasibility study with the costs in China, and so there's a lot of hope in that. We've done the deal with the DOD where we can start working on the stockpile and seeing if our process works and to what ability it has on that stockpile. And eventually, I hope that the U.S. realizes that they have to have a production of manganese and, will assist us in getting something going on the Artillery Peak deposits. But the company has a website out there called AmericanManganeseInc.com. You can do all your due diligence on that. We have I have an email address, LREAUGH@AMYMN.com. You can contact me there. You can phone the office at 778-574-4444. Or you can, send us an email.
Larry, thank you so much for the update.
Thanks, Jim.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on November 13th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.